Good morning, everybody, and this is your Dow Jones day trade setup for today, Wall Street 30. So nothing really transpiring at the moment. We do have the Feds, or the FOMC, I almost called them clowns, but they're probably not clowns, but you've got the FOMC team coming out this afternoon with the results of their 3-day meeting. And the reality of that meeting is quite simple. Are they going to step in and do something to rein in the bond market, so get the bond market under control? Because that's what's creating the volatility in the markets at the moment, or are they not? So if they do put something in place to control the bond markets, then you'll more than likely see a break to the upside, and we'll probably go and fetch the next target, the upside, and pretty quickly, and that would be 33,464. If they decide not to do anything and they leave it, then you can probably expect a fairly deep pullback. I don't even think these areas of structure will offer any support. You probably find support down here at 32,113, and if that gives way, you'll definitely get support down the bottom here at 31,665. Okay, so it's kind of a coin toss scenario at the moment because you have no clue what these guys are going to do. And so if we look at the 3-hour, you can see we're pretty much range bound. No real reason to be trading this at the moment. Oscillators are easing off in the 3 hours, starting to point to the downside, which is pretty good. There's a pretty good example of the oscillators crossing over far apart. Remember, we keep looking for them, and there's a very good example. You can see that what happened last week. So you pull back onto structure. Okay, well, not quite structure, but fairly close to structure. Oscillators group far apart. They crossed over, and look at how violent the move was to the upside. Anyway, so for this week, we have just been sideways, and this is typical of FOMC weeks. The first 3 days are pretty much sideways, and this is where patience is key, which is probably what I should have exercised yesterday and just ignored it. But I did see sort of two things. So the one thing was pull back into this area here, and it wasn't quite getting to this area. And well, actually, what I called out on Telegram was that layer there, and it still hasn't got there. That's 32,785 area. That's kind of what I was looking for. It didn't quite get there, but if you switch across to the 15-minute, you'll see a lot of positive price action here. We jumped in sort of up here. You can see there is 15-minute levels here, so we kind of jumped in here, got going for a bit, pulled back, and when it started coming back to test this level, I just decided to dump it. Wasn't really in the mood for waiting for it any longer, and got out of it. So a little bit of a loss, small loss, nothing major. 40 pip loss, I think it was. So at the moment, looking at the 15, you can see we've had a crossover here, and I suppose that was the other thing that I was looking at, and we got a crossover, and we're playing with the 155. It was kind of a gamble rather than a real sure bet trade. You probably would have been better off with a short scalp off structure with those moving averages like they are. But anyway, it is what it is. At the moment, we are sideways. There's bob wire, tail to the downside, tail to the upside. Nothing really exciting to play. Oscillators are starting to group to the downside, indicating you should be looking for a level. We are in an upward trend. If I think about what the Feds could do, my gut just tells me that they're not going to do anything to negatively impact the market. So they're going to have put something in place for the bond market. And this is all a political game at the moment. So that's kind of the reality. And the other thing that you need to bear in mind is that there's a lot of stats around a 2-year bull market. So a bull market that hits its first year typically was always a high probability of it going on to its second year, and the second year is normally more there's more violence, or is a bigger move in the second year than there was in the first year. So just keep that in mind. There's a lot of stats, and remember, the history in the stock market doesn't always repeat itself, but it does influence what's going to happen. So you often see there's lots of guys that do deep analysis and deep stats on the markets, and they'll give you all the cycle analysis as well, which basically points to more upside. I am still bullish, still looking for opportunities to buy, just not looking to buy right here and not looking to buy at this time. So we will sit on the sides until the FOMC has finished, and then we will start looking for opportunities. But for me at the moment, this is money in pockets. Wait patiently and try jump in. Any fall, so if they don't do anything, if there's some negative news that comes out and the algorithms start going nuts and trading that a negative word or something like that, like it normally happens, then start looking for opportunities at all of these levels down here. I don't see people panic selling just yet. Okay, anyway guys, that's it for me today. Pretty much sit on hands day, not really interested in getting drawn into this right now until we break this range one way or another. Break it to the downside, I'm looking for opportunities to buy deeper down. Break to the upside, I'm looking for opportunities to get long. That's pretty much me for today. Hope it helps, and we'll catch up later. Cheers for now.